All right, there you go. All right, boys. So this is my first video on this channel. I don't expect these videos to get a single view or anything. It's not really the point of them. I just started this YouTube channel to pretty much track my journey for trading, hold myself accountable. So I'm 18 now. I've been trading since I first opened up my first trading view chart when I was 15. 3 years ago. I just turned 18 a couple months ago here, and it's been a long, hard journey. Started with crypto, started with stocks, stuff like that, and then I just now moved into Forex recently. So right now I'm trading liquidity, supply, and demand, so I'll show you guys kind of how I trade. Right now, I'm just going to stick to mostly like weekly recaps of my progress. The trades I took, the trades I avoided, why I avoided them, why I took trades, confluences on why I should take the trades, confluences why I should stay out of the trades, stuff like that. So yeah, that's pretty much it. I'm going for a few funded accounts right now. Right now I have 300Ks that I'm going for, and then I plan on getting 200K. I'm probably going to buy it this weekend for the start of November. So potentially $500,000 in funding. Now I still have to decide if I want to copy trade all those, what I want to do with all those. I trade 2 time frames, so I trade the 5-minute and then I trade the 30-minute. So I also got to decide if I want to trade both time frames on all the accounts or just the 5-minute on a certain account, 30-minute on a different account. So I got to figure all that stuff out. But as of right now, man, I'm just gonna pretty much show you guys the trades that I took for the week, the trades that I stayed out of for the week. So myself, I can just go back and analyze what I did right, what I did wrong. Like I said, I don't expect anything from these videos at all. So I wrote everything down, all the positions this week, so I just pretty much go over everything. I'll show you guys my screen, and then I'm pretty much just I'll show you guys exactly how I trade, like the strategy real quick. I'm not gonna go too much into depth. The strategy alone, I've been trading started last October, and then went through a pretty rough, slow patch during the winter, and then a lot of stuff kind of happened during the summer. I have kind of 2 other businesses I do in the summer, so I really got sidetracked from that, and I kind of got away from trading, which I shouldn't have. And main reason I started those other businesses is for pretty much to invest in crypto long term, to invest in more knowledge for trading, to invest for more funded accounts, stuff like that. And it got to the point where I was just pretty much doing more on the business side of things rather than trading. So recently I just started kind of getting back into it. August, well, before I was very unprofitable, of course, but August I had my first break-even month, and then September I had my first profitable month, and I think I traded maybe 10-12 trades that month. Took 10 or 12 trades that month. And October, which today is the 31st, Halloween, the end of October, I closed my second profitable month. So I know for sure it's coming. Yeah, we're gonna look back on this video because I promise you guys I'm gonna be fucking rich as fuck. But like I said, I'm just making this for my own sake, so I can go back and pretty much look at everything, what I did right, what I did wrong. So yeah, I'll show you guys my screen, and then I'll show you guys kind of an outline on my strategy here. All right, boys. So should be good. I believe so. Yeah. Okay. So before we get into anything, I'm gonna show you guys kind of a quick outline on the way I trade. So this is the first trade I'm gonna go over, but I'm just gonna draw it out for you guys. Let's act like this isn't here at all. So this is kind of how my strategy works. So we trade liquidity, supply, and demand. So normally you have supply and demand traders that say price is trending up like this. They're pretty much just buying at demand points like this. Oh, fuck, I really fucked that up. They're just buying at demand zones like this, bottom of a move. And then, you know, usually their stop losses down here, take profits at this next high, and they're continuing up. And you can trade that way, that's definitely like profitable for sure, but you can take a lot more losses as well. And the way we trade is we actually trade straight up liquidity, supply and demand. So we literally stop out normal supply and demand traders, essentially, pretty much. So if price is trending up like this, what we do is we target the zones down here, okay? So if you're taking a demand position, we wait for price to sweep these lows, and normal supply and demand traders are getting in right here at this level, at this previous low right here. And their stop losses under these lows. Price sweeps down, stops them out, puts liquidity into the market, and it pretty much, with that liquidity, you have banks and institutions trying to buy at a cheaper price, and they're pretty much getting in where we're getting in, and we're just routing their back pretty much. Like, as soon as we get our entry confirmation, we target these highs and we just continue trading with trend. So it's pretty easy, because a lot of people, when they trade supply and demand, they're always saying like, oh, like price stopped me out and it ended up going in my direction. That's pretty much exactly like our strategy. That's how it goes. And the same thing with supplies. Price is trending down like this. Wait for price to sweep a level of liquidity. Of course, it has to break this low first. Price can sweep liquidity, tap into our normal supply zone. If we get our entry model, which there's a few entry models that we take, we take short position and then we target down here. And obviously, you have to make sure price is just trending down like that. You don't want to be taking price or taking trades out of trend. So I'm gonna go over this position I took. 1 second. Okay, there we go. So this is the first position. So 1, 2, 3, 4, 5, 6. Okay, so we had 6 positions. Yeah, 6 positions this week. I took 2 of them. One of them I took on Monday. Price did actually, we hit a 1 to 10 on this trade, which is at the highest we take is 1 to 10. Regardless, pretty much 1 to 10 is already high. If you're taking anything over that, most likely you're just being greedy, to be honest, and it's just not worth holding that much. At least for me, anyways. And then we took another position on Friday, which ended up just being a loss. We'll show you guys like the rules that I stick to and all that stuff. Friday's loss was a good loss, followed everything, so it was just an unfortunate loss. And then I'll show you guys, we have four trades that happened during the week that we skipped. I'll show you guys why we skipped, and I actually believe all 4 of these ended up losing. So this is the first trade we took. I'll actually pull up, I should have a video of before I entered this trade so you guys like don't think I'm lying or anything. Again, this is for myself, so I really have no point of to show you guys some random ass trades that to say I like made money on. So I'll pull up a before video somewhere here. So just entered this GN position about 2 hours ago. This is it on the 30-minute chart. Yeah, so now that you guys saw that, I think that video was around here, somewhere around there. So I'll quickly go over this, and this trade can look weird because there's this massive gap here, but I'll go over why this is actually a good thing. So this trade was taken on the 30-minute chart on GN. Here's our pairs list. This is what performs best on the 30-minute, at least what I found in back testing. So of course, you know, you can add some other pairs to that, but we kind of stick to these. So GN was obviously moving bullish here. We were taking out highs over and over and over again. And then we just started taking out lows recently. Price was clearly trending down. The most major one was right here, that price actually opened below on Sunday. So right here, we have our supply zone. So this is just a pretty much bullish candle that led to selling pressure. That's pretty much our supply zone. And then right in front of it, you have a level of liquidity. So let's pretend there's no gap there. What you're essentially saying is just you have your supply zone, you have price create liquidity, and then you have price sweep liquidity continuing down, and then price continues up in the bearish trend, sweeps liquidity. So your normal supply and demand traders, you can literally see it. They're getting in right here at this price, at the supply zone, you know, and they're targeting these lows. and they get a quick little push. Oh yeah, like we're in profit, and then boom, right to their stop loss, stops them out, and then it continues in their way. And that's literally our exact strategy. That's why like banks, institutions, they just strive off pretty much liquidity sweeps, because they're stopping out their orders, which puts liquidity into the market so they can put their position in, whether it's longs, whether it's shorts, and they're not moving the market like too much at all. So with, of course, the retail traders' liquidity into the markets. So right here, swept liquidity, we have our supply zone, and we had a clear, one of our entry signals was just a bearish close without closing inside the zone. So we had our candle react, we had our bearish close. Now another reason I took this trade is because this can look ugly, but this is very important. Market opened here on Sunday, and we didn't put in a weekly bottom wick at all. And if you don't know, if you go in the weekly chart with anything, almost every single candle has a top and bottom wick. Almost every single one of them. So the fact that price opened without a bottom wick and price, pushed up to our zone, reacted off the supply zone, makes it a very good trade. Pretty much saying, price still has to make that bottom wick, so that's a good possibility that, price is going to go down there and put that bottom wick in. That also makes it a good place to target for your take profit. So that was also very heavily considered in this trade. And I think in that video I showed you guys, I was only targeting maybe right here, like a 1 to 8 or so. And that was when I first entered the position. I really wasn't worried about take profit. I kind of just placed the trade and just dip. But after I looked at it more, I realized, okay, there's no bottom wick, so you're really just missing out on free profits if you're not targeting the bottom wick. Because that's the whole reason price really is moving down. Like, besides obviously this bearish trend, the main reason here is the bottom weekly, or the wick. God, the week doesn't have a bottom wick. So yeah, that was a good trade to take. So I entered a few pips late because I was actually on a run. I was not at the charts, but I set alerts. So price came up, tapped our zone. We got a good bearish reaction here. Now, originally, entry would have been right here at this close. You can already see how much of a difference that made. That went from like a 9.8 to a 1 to 11. So, almost 3 RR difference, which is insane. So, yeah, if you got in on the close and you're targeting 1 to 10, you could target the whole way, up here and still hit a 1 to 10. But that was not my case. I got in a little bit late. So, another thing about this trade was we took it on 300K accounts on the 30-minute. One of them was started, I'll be honest with you, months and months ago. And that was when I was very unprofitable. And I was actually about to blow the account. And I was like, I'll just take it, whatever. Because I pretty much knew I was going to lose the account anyways. It was just an old account sitting there. I honestly forgot I even had it. And, I was like, okay, bet, like I'll just put on this trade. Well, it ended up pretty much bringing that whole account back to break even, which is like insane. Because, yeah, I made 10 grand off that account. Obviously, I'm not past yet, so that's just pretty much valuation money. But, so I took it on 3 funded accounts, and I can go into depth. I don't want to explain it too much. But when we enter trades, we use I started using this, a volume profile. I'm not going to go into depth with this because it's super complicated to explain. I don't want to explain it right now. But volume, at the end of the day, is what actually moves the market. No matter what market you're in, volume is what moves the market. So price pretty much runs to high and low volume, okay? And this tool, I'm not going to get into depth, but there's a few things that we follow, a few things that we look for. This red line, for example, it's called a point of control. This is where the highest volume pretty much was. Price likely will run to that area, pretty much. And when we enter, we don't want to see the point of control at our entry point, because high chances if price already wants to run to that area and our entry is at that area, price could theoretically, just maybe consolidate around that area, go to your stop loss. So that's why I don't personally take trades like that. What you want to see is the POC at least in the direction of your trade. So for me, if the POC is down here, if the POC was down here, that'd be great. Now down here, there's very low volume because market just like kind of opened. So as you can see, after we got through this last little bit of volume right here, price literally just fell straight down. That's why I targeted so low like that. Because you're pretty much just missing out on free profits if you don't. So, what else? There's a few things I can go into depth here. You have low volume nodes. That's what this is right here. Price was reacting off low volume nodes. Price, when there's a low volume node, it's pretty much a gap between, say there's high volume up here, low volume down here, and there's high volume, and there's low volume in between it. When price is moving, a lot of times it'll either go through that high volume, react heavily off that low volume and come back down, or it'll just push right through it. And that's kind of a 50-50 chance. So off our entry, there was a low volume node, which actually I think this changed. This definitely changed because like this tool can change obviously after the position is made because more volume came in, so obviously the tool is going to change. Now when we took this trade, I don't believe the low volume node was a lot lower, which is what you want to see. So, but you just got to be careful there. But anyways, point I'm making is price gets to this point of control. It's a big level where pretty much price can react at, and you saw a little bit of reaction right here, and price actually retraced kind of around this level. After price closed below that and broke below that level, I went to break even. So I set my stop loss at break even, so 300K counts, couldn't lose a single dollar. So it's perfect. So my break even obviously was right here, which I deleted it right before the video had it marked out. Just type stop loss. Okay. So that was my stop loss. And price was down here towards swap hours, and then I believe, this was around 10:30-ish. I ended up going to bed, and then price retraced, which you typically expect because we're obviously in a downtrend. It's not just gonna. We had a very nice move like this, but it's not just gonna continue moving down like this. Like we're gonna get retracements, obviously. That was fucked up, but you get what I'm saying. So price retraced in the middle of the night. GN has pretty bad spreads, especially this day we took it. I don't know what it was at all. I don't know why it was so bad, but GN had pretty bad spreads, and my stop loss was at break even. Now this is very interesting. So price technically shouldn't have stopped you out, but with spreads, it ended up stopping me out on one of my 100K accounts. Thankfully, it didn't stop me out on all three of them. But unfortunately, the one that stopped me out on was actually pretty much like my highest 100K account. So that wouldn't have stopped me out. I would have passed phase one, but oh well, it is what it is. But another key thing about this trade though, if I would have entered this where I was supposed to, which I was only a few pips late. Like I said, I wasn't at my computer, but then your stop loss at break even would have been a little bit higher up, and it probably wouldn't have stopped me out. But it is what it is. Not much you can do there except actually enter on time, which it is what it is. 30-minute, you generally don't. When you're on the 5-minute, you have to be quick. Like I get an alert and I'm instantly on my computer pretty much. You have to have your stop loss set, everything set. As soon as that candle closes, enter. 30 minutes is a lot more lenient. Normally it doesn't stop you out by a pip, but sometimes that happens. And plus technically, like I said, shouldn't have stopped you out, but spreads can do that sometimes. But yeah, that was a very good trade. Me personally, that was my first 1 to 10 I ever hit. So yeah, it's just crazy. Those 200K accounts were like passed theoretically, like it would have been $20,000 a day, which is like absurd. But yeah, we're still in the passive phase, so that was a nice bump to our accounts. But yeah, there's not too much more to go over on this trade, I don't think. If I think of anything else, I'll come back to it. But I believe that's it. Yeah, it's pretty much, it's, you know, it's long to hold through, but like I said, I personally enter and I just get off the charts. Of course, I think during this time I was still trading 5 minutes, so mark my 5-minute zones, and then if there's no trades on that, I just pretty much dip. So yeah, there's not much you have to really do, as in like taking care of the trade. Not even taking care, like monitoring the trade. You do have to watch for like swap hours, so you have to remove your stop loss and stuff during that time, because during swap hours spreads are massive and they can just wick you out in any direction. I think spreads were down, or not spreads, swaps were down here, and there were still people that I trade with that had their stop loss and they got wicked out, or they got like just stopped out, which is insane. So yeah, once swap hours is done, you can just add your stuff back. Your stop loss, your take profit, pretty much back to normal. So that was that trade. It's pretty much, yeah, that's the only winner this week, which at that rate, that's the only winner you really need for the whole month, honestly. Like 10%. People like say 3 to 4%, and this is realistic. 3 to 4% is good in trading. Like once your accounts are passed, it's all percentage based. So, you know, 3 or 4% obviously off a 100K account is 3 or 4 grand, which is okay, you know, for a whole month. It's obviously not much. But when you're talking about 3 or 4% in $500,000 funded, even $200,000 funded, 4% is 8 grand a month. Cool, 8 grand a month for pressing a buy and sell button. Like literally, that's all you do. Once you learn the skill set, there's literally nothing that can stop you from making money, and it's quite literally unlimited, which is like, it's crazy to think about. The skill set's the hardest thing ever, hardest profession ever. I'll literally argue that till the day I die, 100%. Hardest skill set you can ever learn. But once you learn it, literally the amount of money you can make is literally to infinity. There's nothing stopping you from making millions and millions and millions of dollars every month, even if you wanted to. But yeah, there's genuinely levels, but like I said, 3 or 4% a month is good when you're funded. Even if you're funded, like I said, like $500,000, there's people that are funded $1 million. Like that's personally my goal, is at least $1 million. And then past that, I'm gonna get another couple $1 million. You know, start building my own personal trading account, not use prop firms. So 3 or 4% when you're talking on a massive account size, it's insane. It's literally insane. But yeah, and when you hit one trade like this, that's 10% for the month. It's insane. But yeah, like I said, you hit this in a day, 10% in a day, which is insane. Like that's why you almost have to stick to the A+ setups. Stay consistent, because if you take this trade and then you take a bunch of low quality setups, that 10% is gonna be gone down the drain. So you just have to pretty much stay patient. Know that literally that's enough profit for the entire month. So like you're just gonna stay patient. If the market shows you an A+ setup, take it. Like, other than that, just stay out. And that's exactly what I did for the rest of the week. Euro USD 30-minute Tuesday. So this was the day after. Now I believe I have it marked out for you guys. Yeah, okay. I have it marked out. So I didn't take this trade. This ended up going a little bit in profit, but then I ended up losing. I'll show you guys why I didn't take this trade. So right here, textbook setup pretty much. Prices clearly moving bullish. We just swept lows right here, which is our level of liquidity. Right here's your liquidity. Price went up, broke this high, clean, break of structure, showing bullish momentum, showing bullish structure. Price came down, swept all this liquidity. We got a really good reaction, and the shortest or the smallest take profit we go for on the 30-minute is 1 to 3. So your take profit would have been right, pretty much right there, just about. And yeah, stop loss just a little bit below this low. Usually give it like a pip room, so like spreads. Sometimes price will come down and tap the zone again, so kind of have to give it just a little bit of breathing room. But yeah, the reason I stayed out of this trade was actually purely off this volume tool that we use. I'll show you guys exactly. I think there was a lot more going into this trade rather than just this volume tool. Not a lot of stuff makes sense in this trade, and I think there was some news happening that really wasn't public yet, but I could be wrong. So you never want to enter. This is just a rule I have. You never want to enter when the POC, which is this red line, it's called the point of control. I think I already said that, but if it's at your entry point, we stay out because price could and maybe will consolidate around your zone and then end up losing. But in this case, price did give a good reaction. You know, if I personally was my old self, I would have just FOMO'd into this trade, would be like, oh, good entry, you know, like I'm gonna, you know, miss out on these profits. Take the trade, stop loss, and I would have just lost. And even my my mentor that I trade with, that I learned from, and the Discord that I'm in, a lot of people took this trade. A few of us stayed out because of this tool. I personally stayed out. I didn't take this trade. And yeah, good one not to take because it ended up losing. Now, to be honest, at this point, when price was reacting from this high to the left and failed to break it 2-3 times, probably would have went to break even. So realistically, probably wouldn't have lost anything. But yeah, stayed out of this losing position, which was good. EU, actually, as you can see some of the past positions, EU hasn't been performing too good at all. So I'm honestly not surprised this trade lost at all. A lot of these pairs, if you start back testing, you'll notice all these pairs kind of have, let's say, seasons. Like they go through winning seasons. Like the 1 month GJ, I personally wasn't trading. This was a long time ago, but I'd say it was probably 6 or 7 months ago. GJ went through a month where it hit like 20% in like 3 weeks, which is like insane. And it was all on 30-minute trades. And it was all the times price was trending like this. Price would just sweep liquidity, boom. And then it just hit take profit, and then sweep another level of liquidity, here demand, and then boom, another take profit. It was just back to back to back. And there have winning seasons, there have losing seasons. And obviously, like you can see 3 trades like this. I did take these 2, but I didn't take this one. That would have been, you know, down 3%. Well, when the winning season comes around and you have 3 trades like that actually hit, then you're talking about 10-15% of profits. So that 3% is absolutely nothing. But yeah, just thought I'd tell you guys that real quick. That was off topic. But let me delete this because I did not take that. So on to the next trade that I avoided. GC 5 minutes. So this is our first 5-minute trade. I'll show you boys this. I believe it's this zone right here. Yeah. This. Okay, so some of this, not gonna lie, was kind of based off intuition. When you literally backtest a lot, you kind of get a level of intuition on the markets. Like you kind of just see things that happen over and over again, and you're like, I don't like it. That was kind of one of these trades. This was pretty early, yeah. So I wake up at 5:30 to start trading. This was at 5:40, so this was like 10 minutes after I woke up. But again, price was trending down. We have our level of supply right here. I don't like this liquidity. It's a lot of consolidation. And then we swept the low. Came up, took out all these orders. So there's multiple orders above these highs right here. There's orders. Price came up, swept all of them, and would react off your supply zone and continue down. Which it did technically do that, just very sloppy. It did not look clean at all. So, shit. Okay, reason I didn't take this trade purely was because price was just moving in way too straight of a line. Like, that is not a trending market. What you want to see is price clearly trending down and reacting off these, or just
sweeping these clear level of liquidities and price clearly reacting off these strong levels of supply that actually moved price down. When price is just in a straight line like this, it's literally, it just has these little tiny levels of supply, and price retraces, there's really not much for it to react off. So price kind of just does its own thing and then continues in its direction. So that's kind of the reason I don't really like it, to be honest, and that was really the main reason I stayed out. Price had a good reaction and stuff like that. Personally, GC has very, 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 very bad spreads in the 5 minute. So, yeah, like there was a position 2 weeks ago on TradingView. If you would have entered and set your stop loss and take profit, it would have been like 3%. Yeah, it was a 1 to 3. But after the spreads on your actual funded account, it would have been 1%, which is insane. So it's really not worth, because you're taking a 1 to 3 technically off TradingView, but when you actually put it into the your prop firm, it's literally you're taking 1 to 1 because the spreads are just so bad. So it's quite literally, I hate trading it. I only trade it if we get an A+ setups and the spreads aren't that bad, because sometimes they do get a lot lower, and they never used to be this low. They just recently, like the last month or two, got high, and none of us really know why. I don't know what it is, but yeah, price just pretty much doesn't look that clean. It's coming down in a straight line, and that's really the reason I kind of stayed out of it. We had a clean reaction, clean target to take, but yeah, I just stayed out of it, and price did end up doing its own thing. It just completely invalidated the supply zone and then tapped it again and then just continued down. It's just weird stuff. So that was another loss when voided. NAS 100 5 minute on Wednesday. So these are our 5 minute pairs that we trade. In case you didn't get that part yet. So I believe it was this one, Wednesday. Okay. Why did we not take this trade? What exactly was going on here? I'm trying to remember exactly why we didn't take this trade. There's something. Oh, this was purely, I believe. Oh yeah, that's what it was. Wednesday. Here, I'll show you guys actually right now. So Wednesday we had a lot of red folder news, and I normally don't ever trade, like, I don't even know what you call this. There was just red folders on everything, and this wasn't even like, there wasn't USD news until 2 p.m., but this was the day, I believe, I could be wrong, but I believe Trump was supposed to meet with the president of China, I believe. And I knew it was just going to be volatile all day, because people was just going to be waiting on news for that to come out. If he signed a deal, if he didn't sign a deal, if tariffs, more tariffs were implemented, if he took tariffs off, whatever. And then I also believe there was big earnings that day for a lot of the tech giants, for like Amazon, Google, Apple, stuff like that. So price was literally like, you can see it. I don't even know what you call this. It was just up and down literally all day long. So I just really just stayed out of the markets. I looked for A+ setups, didn't really see anything, so I just stayed out. But yeah, if you would have took this position, another big reason I stayed out is because your stop loss would have been absolutely massive. So your stop loss would have been down here, and yeah, like, I don't know. It's just an ugly looking position, to be honest. And on top of the red folder news and everything being volatile, a lot of the day, as you can literally see it right here, a lot of the day it's just kind of moving like this. It's just like up and down, up and down. So it's like whatever position you take, you're probably getting stopped out, whether it's long, short. It's just super volatile. I hate trading red folder news at all, like all the time, because I've had my past experience with it, and it always ends in red days every single time. So I just really stayed out of the markets Wednesday. There was actually 3 trades Wednesday. I don't believe, was there another one Wednesday? Oh yeah, GC actually was Wednesday, and that was another reason I skipped it too.
with that news. But yeah, GC was just bad structure wise as well. But NAS 100 was another trade Wednesday. Skipped, ended up losing. I believe there was actually another one. I don't have it written down. I want to say it was on UJ, if I'm not mistaken. But I couldn't even find it because I don't know where it is. I just remember the disc we're taking it, and that one ended up losing as well. So it's just always smart to not trade on red folder days. So, all right, Euro USD was another position we skipped. So, yeah, like for example, this is prime example to show you guys. Like GN on Monday, there was one position Monday at 7 a.m. So enter the position and then you dip, and there's not a trade. Tuesday, Wednesday, Thursday, like you can go 3 days without a single trade. You know, you feel like you're doing nothing, but you're actually doing something very, very, very good. You're just skipping out on all these low probability setups pretty much. And if you do that, you can quite literally see right here on how much it'll improve your like your profit, your win rate, all that stuff. Yeah, so if you had like FOMO and you know, Tuesday you're like, I gotta take a trade, you know, I just took one Monday, like I gotta take one today. Yeah, you would have just lost another trade. If, let's say, Monday's setup ended up losing, and Wednesday you're like, I gotta make this money back, there was actually 3 setups that literally lost. So you would just keep digging yourself deeper and deeper and deeper. So you just have to stay patient as fuck for this. Like, honestly, there's nothing else to it. You have to pretty much just have your set of rules, which I don't really want to go over right now. Like I said, I'm just kind of making this channel for weekly recaps for myself. I don't expect these to get a single view, honestly, I'm not gonna lie. But yeah, so I'm not going over any of that stuff right now. I'm just going over weekly recaps. But if you have a clear setup or a clear like checklist for your A+ setup, when you get it, just act on it. Put up risk that you're, you know, willing to lose. I risk 1% on this new 200K I'm about to get though. I'm only gonna risk 0.5% until I'm 2% in profit. But yeah, like only put up an amount of risk that you're willing to lose. Only take your A+ setups, and literally if you can just contain yourself on skipping. If there's anything that you have to ask like 2 or 3 times, like, is this good, is this not good, is this good, is this not good, it's 50-50, and 50-50 is just gambling. So we don't fucking gamble. We trade off, you know, probabilities that have proved themselves over and over on literal decades. Like you can test the strategy back to the 1990s and it still fucking works. So yeah, no gambling. So that's why you gotta stay out of low probability setups and just take good ass setups. So GJ on the 5 minute, this was the last trade we took, and this ended up being a loss. This was actually today. Yeah, today at 5:50 a.m. So this was an early one. Right here. So this position, we were trending down. Obviously, we swept out all these highs to the left. Price came down. You can see our clean level of liquidity. Price broke the high. Price came down, swept our liquidity, came down in a nice clean straight line. Another thing you guys don't want to see is, say price is trending up like this, and you know you're waiting on price to come down and tap this demand zone here. You don't want price to be coming down like this, because that just shows sellers are just non-stop driving the price down. All these internal highs right here, sellers are just driving the price down non-stop. And when it gets your zone, 9 chances out of 10, you know, you're gonna get a little bounce, you're gonna get your entry signal, and then it's just gonna continue down. So that's an easy one to, and you don't have to, trades like that can still win, and we still take trades like that, like for sure. But it's just one of those things that like, it lowers your probability rate just a little bit more, your win percentage and stuff like that. But yeah, as far as this trade goes, we had a nice clean move down. We had our entry signal right here. We were targeting a 2.5 right here. Price went up a little bit and then ended up just stopping us out. So these are one of those just unfortunate losses you have to get through. It's really nothing else to it. Good setup. We'd take this 10 out of 10 times. The only thing you could, this is, I'll get into depth with this a little bit.
So I'll show you guys how we trade. We trade the 5 minute and then we also trade the 30 minute. And for example, there's a 30 minute trade you actually could have taken that went against the 5 minute trade. And this is something that happens kind of all the time. So for example, there is a supply zone right here. And you have, I'm not gonna draw it. No, actually I will draw it out. Okay, you have your supply zone right here. And price was just taken out low. So you have liquidity right here. And price was clearly reacting off these supplies, normal supply and traders, or supply and demand traders getting in, and then they're just getting stopped out. And price moving to our top zone, nice entry signal, and you literally could have took a short position right there, like 100% valid, could have took a short position. But we saw this too, or my Discord saw this. This was at 4:30, I was sleeping, not gonna lie, but could also be like, okay, well, price is reacting from kind of a demand zone down here, you know? If you draw a horizontal line, you can see price had multiple reactions over here, about right there, right there. You're like, okay, well, price is bullish. And you could also say, okay, well, there's a gap down here to fill, you know, it can go bearish. So when you go to the higher time frame, you're gonna see cross confluences on if you think it's gonna go bullish, if you think it's gonna go bearish, whatever you think. On the 5 minute, you have to just kind of ignore that and just focus on what's happening right now in the 5 minute. Because you can go to the 4 hour and see how big some of these candles are. Like, you could take this candle, for example. That candle, just how big the bottom and top wick is, there could be long positions in there, there could be short positions in there. It don't matter. It doesn't matter. We're not looking on the 4 hour chart and be like, okay, you know, we're going bullish here. We're only going to take bullish trades in the 5 minute chart. That's not how it works at all. You can take positions that go against the higher time frame trend. You can take positions that go with the higher time frame trend. It does not matter at all. So this, for example, not the best reacting from that supply, but this is also a trade we take all the time because a lot of times, yeah, price reacted from that, but internally, price is still creating a valid structure on the 5 minute chart. And that's why we target so low. Because a lot of times, price is still sweeping liquidity and demand traders are still getting in here and pushing price up. And that's why we target so low. We're not targeting these highs because, you know, we think price is going to go make another higher high. We're only targeting this push off this demand, if you like understand that. But yeah, those setups a lot of times they do so win. It's just not a great factor to be like, okay, we're reacting right off supply. But this is still, what would that be? It'd be an A- trade. If you have everything good and then there's one thing that's kind of like throwing it off just a little bit, maybe it's like failed to. Sometimes if price is bullish like this and it makes your new high just by wicks but not a candle close and comes down, not a double top, but just imagine there's a wick right there. There you go. But that would be like an A- trade because everything lines up. It's just kind of one confluence is off. You're like, I'd rather see it like close above with a candle close, not a wick. So if it's one thing off like that, obviously we still take the trade. Those trades win a lot of the times as well. We just stay away from the trades, obviously, that there's like two or three things wrong. Like, for example, the GC trade, it was in a straight line. I don't really like it. Spreads are horrible. There's red folder news all day long. There's 3 or 4 reasons right there. Like, those are just easy ones to stay out of. But yeah, trade like this, really just not much to go over. Nice demand zone. Like I said, liquidity right here. Price came in a nice clean line. Price reacted off our demand zone. Volume tool also lined up with this trade as well. That's what's actually been saving us recently, is using the volume tool, because everything can look A+, but if that volume tool is not what you want to see, which I'm not going to go into depth on what you want to see because that's a whole hour video alone. But if that volume tool does not line up, just don't take the trade, because a lot of times everything can be A+ structure wise and be like, oh, it's an A+ trade, like why did it lose? And
and then you pull up the volume tool, and it'll literally say otherwise. Be like, okay, but this was a clear trade to like stay out of. So, yeah, volume tool lined up with this one, but yeah, just an unfortunate loss you have to get through. But that really shows how like insane this strategy is. Like, for example, like yeah, hitting a 1 to 10, you can go and take 3 or 4 trades on A+ setups, and they could all lose. Which 4 or 5 trades on A+ setups, all losing is very low probabilities. But they could all lose, and you could still close the 5% profit, which is big. So it's kind of an insane strategy. It really is crazy. Paired with the 30-minute and the 5-minute, hitting those big risk rewards can change everything, guys. Like this month, I was literally like September was my first profitable month, and October, like with this government shutdown, it's been like rough for everyone. Like markets have not been moving like they're normally moving, like at all, and a lot of people have been losing a lot of money. And we've managed to, obviously I was like in drawdown a little bit, but when you're taking your just A+ setups and you're not over risking, not taking any stupid positions, the equity curve is going to catch up. Like for example, this week, the equity curve caught up, boom, we hit our 1 to 10, and literally the month ended profitable. 3 weeks of drawdown. Last week, closed the month profitable. So another profitable month. It's just insane. It just kind of shows you just have to trust the equity curve pretty much. Everything's back tested. Everything's proven it's profitable. So all we have to do now is just pretty much thug it out. Keep trading. Keep taking only the A+ setups, obviously. Don't do anything stupid. I first started getting 100K accounts. My first 100K account, I was risking 2% a trade. And I lost like 2 trades in a row, which normally would be nothing. Like now it's nothing. I could lose 3 or 4 trades in a row. I don't care at all. You just keep trading, keep following your plan, and the equity curve will catch up 100%. But back then, yeah, like I gotta make this money back, and then you start taking stupid trades, and then you just blow the account. I've blown multiple accounts, so I know how that is. Right now I'm getting to a point where I truly believe, I don't want to say quite profitable, because they do say, you know, you should be at 3 profitable months in you, but right now, yeah, like I said, I'm at 2. October has been the most learning month I've ever pretty much encountered, ever. The amount of lessons that were learned is actually insane. Like I literally had to make a Google, like there's probably 6 or 7 like massive lessons I learned. I had to make it on a Google Doc. I literally put it on my wall. So I don't forget. Just simple things you learn. Like for example, we were in a NAS trade and price was in profit and New York opened at 9:30 and it just dumped straight stop loss. We were like, okay, well, what can I take from this information? You can take, okay, well, maybe it's not smart to hold during New York open. So, make sure I'm still, yeah. So, look back and you back test and you're like, okay, well, a lot of these trades that are taking during or around like opening on New York, or the open of New York, I should say, and if you're in a trade and New York opens at 9:30, a lot of times it just be A, super volatile that you just get slipped on your entry, and B, they just stop you out. So you're like, okay, what can I learn from this? Probably not good to hold during New York. So boom, your rule. And then like there was just rule after rule after rule. Another one, like for example, we have take profit rules. So actually they're right here. Yeah, perfect. For example, GJ stop loss was 6.6 pips. You look to your left. Now there is a reason we only targeted 2.5 risk to reward here when it says you should have targeted 3, and that's because we're reacting off 30-minute supply. So sometimes you do have to look and be like, okay, like like you have to kind of just look at your confluences and realize what's best for the trade. We don't ever look and be like, okay, the rule says 1 to 3, we're gonna shoot for 1 to 10. We don't fucking do that, and you're not supposed to do that. But if there's anything that's telling you like, you maybe shouldn't hold that high, okay, cool, we'll drop it by, drop to 2.5 instead of 1 to 3. So that's what we did there. But again, we have rules. So like 6.6 pips says 1 to 3 break even at 1 to 2. Okay, so you set your 1 to 3. Once we get to a 1 to 2, you go to break even. Now a rule that I learned again was I would enter a trade. My slippage or with spreads, I'd get in like something like right there or something. Okay, and I'd be like, okay, well on my trade locker to hit a 1 to 3, I have to target up here instead of down here, where original trading view price says a 1 to 3 at, right? So that messed me up so many times that literally just became a rule. It's instilled in me now. It does not matter your entry after spreads, because these roles were specifically created on TradingView with 0 spreads. When you take spreads into account, now there was position that would literally like just miss my take profit, hit TradingView's take profit, and go down. And like you just have to, your 1 to 3 on TradingView might be only 1 to 2.5 after your spreads. And that's fine. You just have to pretty much, thug it out. That's what those rules were meant for, so you can't really just change the rules because spreads go you in on a bad entry or something like that. You just can't do that. So that was like another rule I learned, is just follow TradingView's entry prices pretty much. Not entry prices, stop loss rules, you should say. But actually that might be a video. I might make a video on that, for everything I learned in October, because October was honestly a brutal month. There was a lot of people, like even big I don't really mess with all those big influencers online, but there was a lot of those people like even in drawdown this month. And that just goes to show something, because normally everyone yells, oh yeah, Q4 is going to be so good. And then with that whole government shutdown thing, we had NFP week that got delayed. So the whole week just moved weirdly because NFP was at the end of the week. And then it just got delayed. So people stayed out of the market the whole week just for it to get delayed. So then the next week it was supposed to happen. So people just speculative, and it was just a whole mess. So much lessons were learned. But the government is still not open. But markets do seem to kind of be clearing up just a little bit. I think people's just kind of getting used to it. A lot of people's, I know I'm happy October's over. I can't wait till November. But November and December is typically just kind of a slower month. So you just kind of have to, be patient, wait for your good setups. But we'll see. It could be totally different this month. But that's pretty much, I know I did a lot of yapping that had nothing to do with the weekly recap at all. But there's really nothing else to go over. We ended the week with 9%. Like I said, unfortunately, one of my 100Ks got stopped out on this. So if it wouldn't have got stopped out, it would have been, that would have been past phase 1. So would have passed phase 1 on 100K, but it is what it is. Like I said, I think we're starting a fresh 200K soon. I might buy it tonight or tomorrow, but it's gonna be for Monday. I just gotta decide if I wanna trade 5 minute on a certain account, if I wanna trade 30 minute on a certain account, what I wanna do. But don't think I'm buying these accounts because you hear 100K account, 200K account, I wanna make some money or fucking buy a bunch of accounts. That's not it at all. I truly believe that I've been through pretty much everything with trading. Everything. That I'm just starting to turn profitable, and especially on a 100K account, and it depends the type of financial position you're in, but I could buy a 100K account and blow it, and I just wouldn't care. And it's kind of important to, be okay, well, I passed this as $100,000 in funding. So you have to kind of take that into your head and be okay, I have to trade this like a professional, capital manager pretty much. And when you're just when the accounts are kind of like cheap that you don't really care if you lose. Like I don't know, they're like $300 or $400. Like yeah, it's a lot of money, but like I said, it depends on the financial position you're in. Like if you're like go to work, you know, like a couple weeks and buy a 100K account, then that 100K account can mean the world to you, and you can like actually probably trade that better than if it meant nothing to you, because you're gonna take less risk. You're gonna only stay to the best setups, and that's the reason I think I blew a lot of 100K accounts at the very beginning. It's because of that reason. But yeah, now I'm at the point where I'm like, okay, I'm past all that stuff. Even if I feel like I can blow a 100K account, like I gotta treat it like, because when you start stacking them up, you're like, okay, well now I got $300,000 in funding. You know, if I pass these accounts, so pretty much something that helped me is you gotta think like a capital manager almost. Like, would I risk other people's money on this trade? Like when a trade comes up and you just see a couple bad confluences that are like saying you shouldn't take this trade. In the back of your mind, think, okay, would I put $300,000 of other people's money on this trade? 100% not. But when you're in that headspace of like 100K account is like nothing to you, and it's your own money, and you're just like, oh yeah, I just want to make some money, then you're gonna do stupid things. Trust me, I was doing all that stuff. So that's kind of another reason to buy a 200K account, because it's obviously a big account, and it just makes you like, I know personally that I'm not doing any of that stupid stuff anymore. It's literally only a matter of time until I pass all this shit and I'm like making a bunch of money. And I don't want to tie money to progress. It's mostly just like sticking to your rules. But what I'm saying is like, I'm so locked in on sticking to my rules that it's only a matter of time where the money is a byproduct of following your rules. So that's kind of why I'm buying a 200K account. It's because I know I'm not going to do anything stupid with it. I'm going to manage my risk with a 0.5% risk on every trade. Once I make 2% profit, you know, you pretty much up it to 1%. And if you get below that threshold again, you just drop it to half risk. And at half risk on a 2-step, what is it? I believe, yeah, it's 24 trades you have to lose in a row to blow the account, which is just unrealistic. It's quite literally it's just unrealistic. So it's quite literally like if you follow your rules and you don't do anything stupid, it's honestly impossible. And like I said, that's only if you follow your rules, because it's definitely possible. If you're doing something stupid, you start revenge trading. It's easy once you only get a few percent in drawdown that you think, okay, well, this account's going, I'll just buy another one. And so then you just start taking radical trades that mean nothing just to try to make a profit, and it just turns into a mess. But yeah, like I said, I got 300Ks right now. I'm gonna try to get I'm gonna get a fresh 200K for next week on November. Now November has a lot of red news at the beginning of the week, I believe. I gotta double check. But so I'm not too sure how much trades we're gonna be taking during that. But yeah, that's pretty much it. Like I said, I don't expect this video to get a single view at all. I just know this will be my first video on this account. So 2 or 3 years I'll look back and hopefully, I don't even know, but I'll be looking back and thinking, I don't even know what I'll be thinking. But yeah, I just want this on my account for people to look back on, pretty much just to leave a digital footprint, because in the future, obviously I want to teach this stuff. Like, I love this stuff from the bottom of my heart. Like I said, I've been doing it since 15. I love this stuff. I want to, like, in a few years when I'm 100% profitable, I want to, you know, teach this stuff to others, and I want people to look back and be like, okay, you know, this isn't some random guru, you know, trying to just sell me something. Like, I want them to pretty much go back and look on my channel and be like, okay, well, he's been posting his progress for like every week, month after month, and month after month. So that's kind of the main reason. But yeah, there's not much more to go over. I'm not sure. I might actually make a video on the lessons I learned in October, because I just thought of that now. It's actually a pretty good idea to do. But yeah, every week I'm pretty much just gonna go over the progress that I made, the trades that I took. Not every week's gonna be green, of course. This was a 9% week, which is a massive week. Definitely a massive week. This is not normal, and it's mostly off just like one trade, but it's definitely not
normal. We do hit a few 1 to 10s do come up like every year. I'd say maybe like 4 or 5 1 to 10s, maybe even more. But 9% weeks just not like too common, so don't expect that at all. There's definitely going to be losing weeks as well. You just have to let the equity curve play out. I think it was September. Like, yeah, we had two losing weeks. Well, you just saw it in October. Yeah, we had 3 losing weeks, and then you just have to keep trusting the equity curve pretty much. And last week capitalized on the same positions that we were looking for, A+ setups, followed all our rules, and we ended the month with a profit. Same thing happened in September. Like, you'd have 2 back-to-back losing weeks of, maybe first week September we lost 1%, second week we lost 2%, third week, okay, cool, we made like 5%. Okay, cool, well, now we're up 2%. Now we have the last week, maybe if you make 1% or 2, you're in the month with 3%, which actually, I think that's what we ended September in. And like I said, 3% to, if you're just getting into trading, it's gonna sound like nothing. You're like, 3%, like, I only have $1,000, 3% is $30 or whatever. I'm telling you, 3%, like, I just sit here and keep thinking about it. Like, once you get so much in funding, 3% is a lot. Like, 3%, I'd be more than happy with 3%. But so, yeah, I'm not gonna lie. Like, there's months that, at least my mentor took in, what was it? I forget. It was one of the months at the beginning of the year. I want to say it was April or March. There's a 20% month and a 30% month, which is insane. Like, it's insane. But again, you have your slow months. Like, June and July, we only made, June and July literally is break even pretty much for 2 whole months. I think June, maybe we made 1%, and July was break even. And again, that's like, if you would have took one stupid trade, it would have just been a red month. So that was, following all the rules, of course. But you guys can see, like, this stuff definitely has seasons. So, like, don't be surprised if, like, 2 weeks in a row are just red, because that's very possible. Like, 100% is very possible. Even in back testing, there'll be a pair that literally will back test and it'll lose 3 or 4 times in a row, and then boom, you have your winning season kind of kick in. And you're like, okay, well, we won 3 or 4 trades. Well, the risk to reward, when we lost those 3 or 4 trades, we only lost 3 or 4%. But on these winning trades, when we're taking 1 to 2s and 1 to 3s, we made 9, 10, 11, 12%. So, the winning trades, or the winning streaks, definitely outweigh the losing streaks. I wouldn't even say they're streaks. I'd just say we only take 3 or 4 trades a week. So it's very easy just to have a red week. Maybe if you took 2 break-even positions, lost a trade, whatever. It's very easy to have a losing week. But, again, you just have to let the equity curve play out. Very easy to be profitable by the end of the month. Again, you have your slow seasons, and some people, like July, some people, for other people, they might have a 15% in July. And for us, it might be break-even. And I know August, for me, it was break-even. I was still learning a lot of stuff. I missed out on a lot of good trades. But my mentor and the Discord that I'm in, they ended up pulling 30% that month. And I also seen other people, like big people online, influencers, all that stuff, be like, oh, August was like so bad, like I didn't make any money August. So it's literally every single strategy has its own seasons. So it's pretty much what you're gonna see on this account. Like I said, 9% week is a lot. Don't expect that every single week at all. But the occasional 1 to 10s will come around. So but yeah, that's pretty much it. The next video will probably be first week in November recap. So we'll see what that looks like. I know a lot of red news, so we might not take much positions, but we'll see. Hopefully government opens back up, because it's been just screwing over the markets like bad. But yeah, I think that's pretty much it. So thank you guys for watching. If anyone watches this, I highly doubt it. I don't expect it. Like I said, I don't expect anyone to watch this. Just posting this for digital footprints. I can come back and look at it week after week, so I can come back, see the mistakes that I made.
other people can see the mistakes that I made, stuff like that. So yeah, thank you guys, and I'll see you on the next.